just as easily turn into what kind of pattern? Could easily turn into a flag pattern or a pennant pattern, right? Okay, so yeah, whenever you see a hangman, technically it's an early reversal bearish signal, but it doesn't always play out that way. In fact, it's one of the least consistent for that. All right, any questions on hangmen? And no, there are not any hang women. Who asked that? You knuckleheads. All right. Great. Steven says this makes sense. I always thought the hangman was a very good reversal signal, but turns out it's not so. Good description. Thank you, Steven. I'm glad that that makes sense to you. Wonderful, wonderful. All right, let's talk about the next pattern. And the next pattern being the shooting star. Now, notice the shooting star is basically upside down compared to the hangman. Notice over here on the right side, here's my shooting star. We are in a bullish trend or a bullish upswing. And we've got a small real body, character number 1, small real body with a long upper shadow, not a lower shadow, but a long upper shadow that is at least 2 to 3 times the size of the real body. Little or no lower shadow. This candlestick may also be black or white. Feels like we should have Michael Jackson singing for us at that moment, doesn't it? Doesn't matter. All right. So it can be black or white. Does not matter. The important things about the shooting star is that it's at the end of an upswing, small real body, long upper shadow, 2 to 3 times the size of the real body, little or no lower shadow. In practice, here's what happens. It reveals a strong change in sentiment. It precedes a bearish reversal, and this is a very strong bearish reversal signal. Contrary to the hangman, the shooting star is one of the strongest one that we'll find. In terms of a single day reversal, the shooting star is an excellent, excellent signal. Why is the shooting star such a strong reversal? And the answer is the upper shadow. Is that upper shadow bullish or bearish? Based on what you just learned, you're starting to see. I've got a lot more consistency in your answers. Bearish, that's right. Because in order for this upper shadow to be created, the candle had to start out at some point today. The bulls came in at some point, but the bears came back, and we ended the day with a long upper shadow. That upper shadow reveals that bearish pressure came in. Now, look at the context. We've been in a bullish swing. We started the day super bullish. By the end of the day, the bears came back and said, nope, I'm done. We're turning this ship around. Sure enough, what do you think often happens the following day? Very often the bears come through and we get a reversal. Now, it's not always the next day. That's why I don't have a hard and fast rule for entry. But this is a very, very good signal. When you see this signal, what do you think would be a really smart thing to do? If you're trading this trade bullish, let's just come over to another one here. Let's say we were trading this trade bullish, and maybe we're $8 or $10 in this move, and suddenly we see a shooting star. What do you think you should do? Tighten your stop. That's right. Tighten your stop. That's exactly what you should do. You're trading along. You see a shooting star. This is what I would call an early reversal signal. In other words, we don't have a reversal yet. We're far from having a reversal. In fact, most of your other indicators and most everything else is probably not even telling you that there's a reversal coming, but your candlestick is. Your candlestick is saying, hey, the bulls were in strong control for 2 days, and they took over after a bearish swing here. So the bulls were in strong control. You had a couple of really good-sized candlesticks. And here, suddenly, we've got downright strong indecision. And, oh, yeah, by the way, the bears really came back at the end of the day. That's a time when you say, I need to put my stop about right here in case tomorrow the bears come in. I'm just going to stop out of the trade, take my profit that I've got. Maybe you didn't get all the profit you wanted. You know, that's the case sometimes, you know. But bottom line, when you see that candlestick formation, you got to start getting ready to jump out. Perfect example, you know, students often, well, I say often, one of the common complaints I get is they'll say, well, I saw the shooting star, but I didn't really have any profit in my trade, so I held my trade. Well, you can't do that. And I have a perfect example of that today. I've got a trade that I've got going on, and I was really excited about it. I really thought it was going to move several dollars, and it didn't. And by the end of today, I've got a 3-day reversal pattern that's telling me the trade's going back down. And I really don't have much profit on the trade. I mean, I got like 20 bucks. I mean, I have like no profit on the trade. And I don't know if I'm even going to cover commissions. But I'm looking at it, and I've got two choices. I could sit here and hope. I could say, well, gosh, I hope it takes off and runs tomorrow. Or I can sit here and say, well, I'm going to leave my stop in there, and I'm probably going to get stopped out, but at least I'm not going to leave all my capital on the table and potentially lose it all. That's when it comes down to being a mature trader. And the reason we use these early reversal signals from your candlesticks is for situations like that. When you see those candlesticks starting to shape up and it says, hey, this is an early reversal signal, set your stops a little bit tighter, wake up, be aware of it, and realize that you may stop out. You may even lose a little bit on the stop out, but it was worth it because more often than not, whenever you have a big reversal, it follows a signal like this. And that's when you say, I don't want to gamble with that. All right? So now let's take a look at this next example over here. Next example, similar, traded up into a shooting star. And here, the next day, we actually got another 2-day candle pattern that we're going to learn about tomorrow. Or not tomorrow, but in the next class. It's called a bearish engulfing pattern. But again, you could just tighten your stop in here. You probably would have stopped out on this particular second day. And, take a look at it. You might be forming a flag, or this thing could reverse. You really don't know. But the one thing you do know is that shooting star warned you, and it said, hey, be careful. This thing could be reversing. All right, let's turn this thing upside down. Let's talk about some bullish reversals. And this is going to be the hammer candlestick. Now, the hammer is going to occur at the bottom of a downswing that I just marked through. The bottom of a downswing. Now, take a look at the characteristics of the hammer. Small real body, long lower shadow, that's 2 to 3 times the size of the real body, little or no upper shadow, maybe black or white. Ladies and gentlemen, have you seen this candlestick anywhere else tonight? Yes, that's right. It looks just like the hangman. What's the difference in the hangman and the hammer? What's the difference in the hangman and the hammer? And the answer is location, 100% location. What kind of a potential reversal signal was the hammer, was the hangman? The hangman was a potential bearish reversal, came after an upswing. The hammer is a potential bullish reversal, comes after a downswing. The hammer reveals a strong change in sentiment. It precedes a bullish reversal. And guess what? This is a very strong bullish reversal signal. It's a very, very strong bullish reversal. For the same reason that the shooting star is a strong bearish reversal, the hammer is a very strong bullish reversal. Very, very often when you see the hammer, it turns into a bullish reversal. Now you understand my story a little bit better. I realize it's kind of a cheesy story, my girl walking in the dark alley, but you guys get the idea that you can have the same story in a different location and it means something different. You see what I'm saying? And the same thing happens with the hammer. The hammer is formed by having the bears drive it down, but then the bulls come back. Okay? That's the same way that the hangman is formed. But the difference is the location. Where did this thing happen? Where did it occur? And by understanding the location of where this sentiment is taking place and where the sentiment's changing hands, you can better understand the trading sentiment and what the likely turns are going to be. Take a look at a couple of these hammers here. There's a nice little hammer. See the downswing here? Downswing coming through here, really strong little hammer. Had the immediate reversal right after that. Same thing over here. Strong hammer, immediate reversal. Notice in all three of these cases, we got a black one, we got a white one. Doesn't matter what the color of the candle body is. What matters is the formation. A lot of times people think that the hammer can have zero upper shadow. That's not true. This is a hammer over here. It's a small upper shadow, but there is an upper shadow. This one here has a very, very small upper shadow, but it's in there. This one here has a small one, but it's still in there. So, you can definitely have a little upper shadow. You don't want a lot of it. I mean, if on this one over here on the right, let's say that the shadow had been like this, well, I wouldn't have called it a hammer because that's becoming a lot of shadow. But, my general rule is if I have less upper shadow than I have candle body, I've got very little shadow. Just kind of similar, here's a shooting star. Similar formation, small lower shadow. It's less than the real candle body. And that's probably a pretty good rule of thumb. I don't know that it's a technically astute rule of thumb. I've not specifically got a book that tells you that, but I've looked at a lot of these, and I think it's a pretty good rule of thumb. If your if you're in the case of the shooting star, if your lower shadow, in the case of the hammer, if your upper shadow is smaller than the real body, it probably qualifies for the shooting star. Okay, does that make sense? All right, let's talk about the old doji here. The doji is a very specific candle. It is also a variation of a spinning top, but you can see from the picture here, this sucker has zero body. It is more like a cross, all right? And the doji is a very specific qualification of a spinning top. It has the same open and close price. Has the exact same open and closing price, or it's so close that it's just, literally pennies apart and you can't tell that there's a real body. But technically speaking, it has the same open and close. It shows a complete balance of the bulls and the bears, and very, very often this leads to a reversal. When I say very often, very, very often it leads to a reversal. It comes in a lot of different varieties. We're going to look at a couple of those in just a second here. But the last point on the doji is all doji candles are fairly strong as an early reversal signal. You should pay attention to them. When you see a doji, make note, because there's a good chance that it's going to react in an opposite fashion the next day. What it shows is it literally shows that the movement that was leading up to it has come to a halt, and then it's prepared for a reversal. It doesn't always happen, but it's prepared for it. Maybe it came down this direction, it came to a halt, and it's prepared for a bullish reversal there. Here's some variations of the doji. Actually, these are the technical variations. We've got the standard run-of-the-mill doji. All right, just looks like a little cross there. You've got the long-legged doji, and the long-legged doji is kind of the doji version of the high-wave candle, long upper and lower shadow. Now, either one of these candles can be a reversal, bullish or bearish. Okay, so if you're in a bearish trend and you get a little doji, it's going to most likely be a bullish turning signal. If you're in a bearish trend and you get a long-legged doji, it'll be a bullish signal. The opposite is true as well. If you're in a bullish trend, you get a little doji, it's probably a bearish signal. And if you're in a bullish trend, you get a long leg doji, it's probably a bearish signal. Okay? Now, technically speaking, there is a term for that. If you've got a bullish trend and a doji at the top, it's technically called a northern doji. I don't care if you call it northern doji or not, but technically that's what it's called. And if you're in a bearish trend, you got a little doji at the bottom, it's technically called a southern doji. Again, I don't care what you call it, as long as you know what it does. Now, the dragonfly doji, what do you think this one is? More bullish or more bearish, this old dragonfly doji? More bullish or bearish? Much more bullish, that's right. Now, why? Again, it's that long lower shadow. And the dragonfly is a doji candle where the doji is at the top and you got this very long lower shadow. This is going to be more bullish, especially in a bearish trend. I'm telling you what, you see a dragonfly doji at the bottom of a bearish swing, it's like in the 95% range, this thing's going to reverse on you. Very, very strong signal. If you're in a bearish swing and you have a dragonfly doji, very, very strong. And you can see this is essentially, it's a doji version of a hammer with a very, very long lower shadow there. Okay. Now the opposite, that's the tombstone. And the tombstone's like the doji version of a shooting star. And the idea is that it looks like a tombstone and it's written your death warrant. If this comes at the end of a bullish swing, it's a very, very, very strong reversal signal that this thing's going to reverse bearish. Okay. Now, a question that I've had for years is, from a technical standpoint, I'd like to have a statistical study on the reversal nature of a tombstone at the bottom. And unfortunately, I don't have the statistics on that. I've watched several of them, and I've seen them play out both directions. So what I find is the dragonfly and the tombstone, if they If the dragonfly occurs after a bullish swing, it can still turn into a bearish reversal, but I've also seen it really turn into a strong bullish continuation. And again, it's that lower shadow that's providing all that bullishness. Same thing with the tombstone. If you see the tombstone after a bearish swing, it can be a continuation or it could be a reversal. But where it's really, really strong is at the opposite ends there. The dragonfly at the bottom of a bearish swing, the tombstone at the top of a bullish swing. Again, the easiest way to remember these, the dragonfly is like a hammer. It needs to come at the bottom. Tombstone is like a shooting star. It needs to come at the top. Shooting star. I'm gonna write the letters that I'm thinking in just a moment. All right, the candlestick you see on the right is one that I created. I didn't really create it. There just wasn't a good classification. I call it the mostly doji. This guy is so small that it's really, you should not call it a spinning top. It's that small. Very, very small. But there is a little bit of a candle body, either black or white. And so I call it the mostly doji. It's got the same implications as the spinning top or the doji. Realize that the doji is a stronger spinning top, so the mostly doji is going to be a little bit stronger, but not as strong as a doji. Does that make sense? So, you guys can use your own noggins and kind of put together how strong the signals are, but I classify that as a mostly doji. All right, here's some dojis in practice. I pulled out a couple of examples where there were a lot of dojis back to back. There's a mostly doji technically, but you see it's got a little, very, very small candle body, but it's so small, it's really a doji. And this one technically should be a dragonfly doji, and it does continue bullish. So you see if this had happened at the end of a bearish swing, it probably would have reversed bullish. But it happened at the end of a bullish swing, and it took another bullish day before it actually reversed. And then you got a really nice little, very, very small spinning top, almost a doji, with a good, solid upper shadow. So here's the challenge in candlestick identification. How do you classify that candle? Do you classify this as a shooting star? Well, no, it's not a shooting star because it's got too much lower shadow. Is it a doji? Well, no, it's not a doji because it has a little bit of a real body. Well, is it a high wave? Well, it might be a high wave, but bottom line is it's got all the signals of being a reversal with no specific name. And this is the practical application of candlesticks. You look at what the candlestick is doing, you look at what it's telling you, you look at the story, and this story is obvious. We have very, very little candle body here. We've got a pretty good size long upper shadow after an upswing. The odds are that this sentiment is changing. And sure enough, the next day it did. It gapped down here. We got a true doji. Following day, another mostly doji. Bearishness came in. And we actually dojied this thing all the way down. Just all sorts of dojis down here. Almost a doji, kind of a high wave candle, long leg doji, kind of hybrid there. And then that turned us back into the bullish move. Now over here on the right side, look at this very strong dragonfly doji. But it was at the top end of the upswing. And then you see how it actually rolled into the reversal. But before we had that rollover, what happened? We got another hangman in here. So it's kind of like you had back-to-back hangman, the first one being a doji, and it is what it is. So again, in practical use, every one of these, you're going to have to look at the context, look at the story, and determine the practical application. What I'm teaching you is the principle of the candlestick. So much of this is going to come from you guys doing trader conditioning and watching these things and working with them and learning what they mean and learning how to recognize the upper and lower shadows, not being afraid of them, etc. And then as you start to put them into practice, it will come more and more clear. Okay, makes sense? All right, let's talk about long day candles. And I see some questions that I'm going to answer them. They're still part of the slideshow. So if I'm ignoring you, forgive me. But I'm going to try to answer all your questions by the end of class, all right? Long day candles. What is a long day? A long day candle, this is where the relative nature of candles comes in. The long day candle is 2 to 3 times the average candle. Well, what is an average candle? Well, that's where it's very relative. is very relative to the individual stock. You know, on one stock, an average candle might be a 2-day swing. On another stock, the average candle might be $10 or $12. And on another stock, the average candle size might be 35 cents. Okay, so 2 to 3 times the average candle for that stock, whatever it is that you're trading. Okay, it's very, very relative. Look at the chart and see what average looks like. And then look for the candles that are 2 to 3 times that size. Those are going to be the long day candles. And what long day candles do is they show us clearly who is in control. Is it the bulls or the bears? And it's just a very obvious night and day difference who's in control when the long day candle shows up. Usually we see the long day candle combining with other candles. That's when we really get good strong patterns from long day candles, but it's still useful to know what a long day candle is. And there is one classification that is very specific. We call it the Marabozu. And the Marabozu looks like this right here. You've got the white Marabozu, which is a bullish Marabozu, and then you've got the black one, which is the bearish Marabozu. Basically, the open and the high and the low and the close are the same. Okay, so there's no upper and lower shadows. Over here, you see the long day candle. It's got a little upper and lower shadow. Marabozu candle does not have the upper or lower shadow. Very, very strong pattern. This is the bullish Marabozu is the strongest bullish candle that you're going to find. And the bearish Marabozu is the, I don't want to say weakest, we'll call it the strongest bearish. So that's strongest bearish candle. Okay, so when you see these, you can just know that it's very, very clear who's participating in the market on those particular days. Okay, let's come over here and take a picture here. Notice several long day candles here on my pictures. Very strong, very obvious who's in control. Now you end up with a day like this where you got the bulls fighting back another long day, bullish day, and that just shows a lot of indecision. And the bears ultimately won this thing. But you get down here to the bottom, look what happened. We got almost a doji, very, very small candlestick, and then the next day, very strong long day candle. And in this case, the swing just went the opposite direction. Taking a look over here at this example on the right, very strong bearish long day candle. As we drove into the hammer, created a support down here, had several spinning tops back to back, had a little gap out of here as the bulls came in with a good long day candle, tried it again. This is an example right here. Take a look. This is one of those examples where you've got back-to-back white candles, but a lower close, in this case a substantially lower close than the day before. And so this was a big gap down, probably an earnings gap, that traded way down here. The bulls did come back, but the bears ultimately won this. Another long day. Had a doji, a hardcore doji right there with a long lower shadow. You know, technically a dragonfly would be right there, but I'll call this guy a dragonfly. Very, very strong bullish signal. Sure enough, the next day, look at that strong long day bullish candle that came in. And then look at this. We got a high wave spinning top at the top here. Obviously, this was a choppy time period where I took this picture, but it gave me some good candles for you guys. All right, now let me answer an issue for you guys. Then I'll open it up and we'll look at questions. The question that often comes in is, what constitutes a swing? And so let me help you here, because this was an issue that I used to struggle with, and it's an issue that some of our students have struggled with. So let me help you out here. Whenever I refer to a bullish or a bearish swing, it is literally what I just called it. It's a swing. It does not have to be a long trend, but it could be. Take a look here. This can be a swing up and a swing down, and a swing up and a swing down. And these little spinning tops will occur in each of these locations. So very often what happens is the spinning top is the turning signal that happens in a swing. Typically, you know, up until now, we've talked about good size long trends, you know, and then there's your double top. Well, with these spinning tops and candlesticks, we're micro, you know, we're zooming in here. Right up in there, you'll have a little small spinning top, or several of them. Right here, you'll have a little doji candle. And then it'll flip back up here, and you get a little doji up top, and then it reverses the whole thing. And so we're not talking about the grand trend. They could come at the end of a big trend, or it could simply be after a very small minor level swing up or down. And that's really all you're looking for, is you're just looking for the signals at a turning point. Obviously, the larger the move, if it's a big full-on trend, the larger the move, the more important that candlestick signal is going to be. But you don't have to have a big move just for the signal to have power. And then sometimes you get a trend like this. This is a very awkward trend where it seemed like every day we're just dealing with spinning top, spinning top, spinning top, spinning top. You know, right in here we got a couple long day candles, but most of these are spinning top, spinning top, spinning top, day after day after day. And then it reverses in here. You got some spinning tops right at the turning point there. But all in all, this whole trend was built of spinning tops. And so the average for this trade for a long time became the spinning tops. And then you get over here to the right side and you notice that, wow, okay, we got a long day breakout, pretty good size white candles. And then right at the end, look at that. Doji as the trade was slowing down and coming to a halt. And so, you know, there you see the turning points coming into play. This is a case of a much bigger trend getting slowed down there. Now take a look at these little small spins here. These little small swings can go up and down as well. And look, every one of these has little spinning tops. Spinning tops rounding out the top, doji, boom, little spinning top right at the bottom, boom, back up here, little spinning tops right at the top, boom, back down, spinning tops, not a spinning top there, little doji candle right in through here, spinning tops all over the place. And so anytime you got swings, it's eligible and it's likely you can have some spinning tops coming into play there. Does that make sense? So hopefully that helps bring some clarification to how these things are shaping up. All right, let me give you some action steps. And since we have some time left tonight, we'll go over to Trade Navigator and do some identification. Here's your homework. Look at several stocks. Practice identifying single candles. Just pull out several stocks and go candle by candle, identifying the candlesticks. Be sure to look at the location. I cannot tell you how important it is that you have the location down. Continue your virtual trading and continue implementing what you have learned up until this point. And next class, we're going to look at multiple days, 2 or more candlesticks that form what we call candle patterns. So that's coming up in the next class. And then we'll get into indicators, and then we'll jump into the trader conditioning system where everything starts to pull together. So we are rounding the corner here in terms of getting your core technical analysis under your belt. All right, let me come over here to Trade Navigator and take a look at a couple of trades. And, you know, we'll just start here, the Dow Jones, right here, right now. And just watch what I'm going to show you right here. Coming back to March of this year, as we peaked out, look what happened. Spinning top. As we zigged and zagged through here, we got a little triangular, ascending triangle. Now, or I said triangle, forgive me, I meant wedge. Whenever you get an ascending wedge, which direction does the ascending wedge typically break out, ladies and gentlemen? We learned this in the last class. An ascending wedge usually breaks down. Very good. So that's exactly what happened. It broke down. Now this is another candle formation we'll learn about in the next class. We got a little flag pattern here. Continued us up in through here. Up at the top, what did we get? Spinning top, spinning top. What is this spinning top that I just noted here? That one that I just drew the arrow at. That would be a hangman. That's right. Next day, good sized bearish candle, and then boom, the bottom fell out. Now look here. We've actually got a couple of small spinning tops in here, but it's not the bottom of the trend. Why did they show up? Well, I'll show you why they showed up. Look at all this support we've got right in that zone right there. So you see, spinning tops will almost always show up at support levels. That wasn't done though. The trend continued, came all the way down here. We got a little flag pattern, bearish flag, got all the way to the bottom. Look at this candlestick pattern right at the bottom. What's that? Single day candle formation right there we just talked about tonight. It's a hammer. Very, very good. That's the hammer. You see the long lower shadow, the small real body. Next day we got another spinning top in there. Long day Marubozu candle. Very, very strong bullish candle. The trend reversed. Watch what happens. Spinning top, high wave candle right at the peak of that trend, or the peak of that swing as we swung back down, spinning top, little hammer in here, swing back up here. Hangman, another bullish candle, 2-day bearish reversal we'll talk about later. Reverse this thing, hammer at the bottom, spinning top at the top. No spinning tops down here. Swing back up here, we got a doji candle, long lower shadow. Even though this is not a spinning top, look at that long lower shadow. You see those lower shadows are building the buying pressure, setting you up for the bullish swing. And then as this bullish swing broke out, it stopped because we're at a hard resistance up here. And this is what the Dow Jones has been fighting through for the last several weeks here, or the last couple weeks here. Look at this spinning, shooting star, spinning top, hangman, almost a doji, long leg doji, another almost a doji. Finally broke out last Thursday. Spinning top on Friday, ended the day with a doji today. 3 points, not a big day. Whenever you zoom in on the details of the Dow Jones, look at that. You're thinking this is a lot of confusion. Now, this might be frustrating for you. How do you think this plays out on a weekly chart? Because remember, this is a daily chart. How do you think it plays out on a weekly chart? On a weekly chart, this is going to be a very small candle. Take a look. So this is a weekly chart. Now, every one of these candlesticks represents a week. Last week's trading represented a small spinning top, and so far, this week's trading represents a little doji candle. You see that? Interesting. So, on a weekly chart, do the patterns work? Oh, absolutely the patterns work on a weekly chart. I'm so glad that you asked. Looky here. Almost every one of these swings, we reversed up here, had several spinning tops, traded down, spinning tops at the bottom, spinning tops at the top. A lot of congestion down here. As we traded bullish here, long lower shadows. Actually, let me just point the shadows out because that's really the story here. Look at these long lower shadows. Those long lower shadows are showing that bullish pressure was building right here around 10,750. Okay. By the way, this was the crash of last fall. This is when all that bearishness came in last fall. And look at this. These weekly candles actually still told us a story here. Had traded up to new heights up here as we flatlined across the top. Didn't have any solid spinning tops up there. We had some other 2-candle patterns we'll look at in the next class. Same thing down here. A lot of 2-candle patterns. And now, this past week, we had a spinning top and a doji here right now on the Dow Jones. Now, that doji will probably change as the week goes forward. And if it can break out of this resistance, then obviously that's what we're looking for here. But, ladies and gentlemen, that's the reason. You want to know why the market's not going very far right now, very fast? It's because we're running into this very, very hard resistance. And I would not be surprised at all to see the bearishness come back in and maybe hang out, maybe even correct all the way down to the 12,000 level. On a weekly chart, that looks like it would be an expectation. On a daily chart, not so much, but on a weekly chart, you're almost sitting here saying, golly, I think that needs to be a little correction down to 12,000. And so that's why I can come to the daily chart, which is what I'm looking at now, and I can say, guys, if this thing reverses back over, I could easily see why we would head down to 12,000. Why? Well, there's a major swing point right here, first of all. That's the biggest reason right there. Secondly, on the daily chart, or on the weekly chart, what happened? Well, that would have been a really solid support level on a weekly chart. Is this making sense? All right. What do you guys think? Is this insightful? Yeah? Good, good, good. Ben says, what about 12,500? Well, 12,500 could be support as well. Absolutely. I mean, I have my lines hidden on here, but I'll show you. There you have it. There's my lines. Whoever it was that asked about 12,500. You see, I do have some congestion in there. I got several places. I mean, 12,750. We could always come back and just test the 13,000 range. But the bottom line is we're running into that hard resistance up here at 13,250. which, by the way, if you were my power trader last week, not last night, but last week, that's exactly what I said should happen. And if we came over to the NASDAQ, what did I say should happen? I said we should trade on up here. Said we might stop in that trading range right here with these peaks, but I'd really like, and it makes a lot of sense, to go ahead and trade on up to 3,100, 3,125 roughly. And so we'll see if that happens with the Qs. With the Dow Jones slowing down as much as it is, the NASDAQ may not get there, but it is, it's trying really hard. And then the S&P looks a little bit more like the Dow Jones. You see that as we're running up into those resistance levels. Now, let me come back to the NASDAQ here. Take a look at this. As I zoom in on the NASDAQ, notice today's candlestick. See, this is a really good learning opportunity. Today's candlestick is actually a white candle, but today we closed down 38 cents. How can that happen? Well, today's close was lower than Friday's close by 38 cents. That's how. But the white candle represents that today's close was higher than today's open because we actually gapped down at the open. If I came into the intraday picture, take a look here at a 10-minute chart, and I'll show you what happens here. Intraday, this is what happened. Intraday, I went past it, sorry. Intraday, you see the dotted line right here? This shows that's Friday, okay? So watch what happened. I'll just draw a little arrow there. We closed Friday up here. We opened today down here. You see that? And so then what happened? The NASDAQ sold off rapidly. Look what happened. Long lower shadows as the bullish buying pressure was building. Buying pressure came in. As we got to the end of the day, we closed the day up here. Well, that's interesting because that is higher than the opening. We opened here, we closed here, but it's still lower than Friday's close. So do you guys see how a white candle can be formed even on a down day? Does that make sense to you guys? You see how that can happen? Hopefully that's making sense. And then you can see why the volume would be reflected as such as well. See, the volume, it shows it was a down day. It was a red day. It was a down close versus the up close. It's a down day. Even though it's a white candle, it was a down day. Ah, finally I got some ahas. All right. Yay. All right. Who was it said, so what's happening with Apple? Well, Apple broke out. I mean, that's not a candlestick question. Come over here to Apple. I mean, how many of you guys were in Power Trader last week when I set this trade up for you and I said 627.50? At 627.50, we would trade to 640, and if we kept going, we were in a new trend. How many of you heard that 2 weeks ago in Power Trader? Voila, that's what happened. Volume confirming it. Now, how far will it go? I don't know. Typically speaking, after a big breakout like this, especially after an all-time high, typically speaking, you get a retesting of the old resistance as a new support. So watch for a throwback here. Let's watch those oscillators. We are pretty overbought. We're very overbought, actually. So it could happen, but it did not happen back in January, and that was the one that really surprised me. We had the breakout, and we never looked back. Had that breakaway gap there, actually more of a runaway gap, but we had that gap there, and it never looked back, and that could be exactly what's happening right here. It's very, very Apple-esque. Very Apple-esque. All right. Alexandra says that Baidu has a hammer. And Alexandra, I'm going to have to respectfully disagree very strongly. That is not a hammer. A hammer occurs where, Alexandra? And a hammer occurs at the bottom after a swing. Oh, now she's clarified as a hangman. That's what she meant to say. And you are correct. Yesterday there was a hangman in here. Today we have a bearish candle, and this actually creates a 3-day pattern called an evening reversal that we'll talk about in the next class. Yeah, so we'll talk about that in the next class, and that is a bearish reversal as well. So, all right. All right, well, let's call it an evening, ladies and gentlemen. I think we've had a pretty full class tonight. We've gone a full hour and a half. How many of you feel like you understand candlesticks a little bit better tonight after the last hour and a half together? And a couple of you say that you wish that you thought that I was going to do different candlestick presentation from the Legacy series. There's only so much I can teach you about candlesticks, guys. There really is only so much. Sorry, I don't know how different you would like it, but I can, what can I do to make it more different? What can I do? Okay, Michael, he says, Jeremy, can you look at the Dow Jones 30 on a 5-minute chart for today? So let me look at the Dow Jones 5-minute chart for today. And he says it's freaky how he has trend lines from TradeSmart. It's amazing how these candles stayed within the lines. And you are correct. However, here's the thing about, I don't think, is that right? I'm getting some after hours quotes or something coming up here. The interesting thing about the intraday charts here, Michael, is the fact that these lines are going to work on a much broader scale, but everybody's looking at those same lines. So it's not a computer issue necessarily. He put in here, that's why he asked about computer trading. It's not specifically a computer issue nearly as much as it is. That's just the fact that everybody's looking at those spots right there. I'm looking at the dollar index. That's why it's not looking right. I'm like, that is not looking right. All right, there we go. Yeah, so you're starting to get a little triangle there, and yeah, totally the resistance of 13,071 or whatever, 13,072 is where my line is. That's what you're looking at, and that's exactly what you're talking about. Yeah. Makes sense there, Michael? It really just comes down, Michael, more than anything. I mean, if you broaden this out, you can see that was the resistance from last Friday as well. It's the resistance from Friday. It's the resistance today, intraday, and tomorrow. If the market breaks above it, it will be the support. And if it does not, it will be the resistance. And eventually it could be the undoing. And, you can go day by day, trade by trade, and watch these things happen from stock by stock. I mean, it's just incredible. Apple's not going to do it today because it wasn't pounding into a resistance. But, the NASDAQ, again, it wasn't right at the resistance area, but pretty close down here a couple days ago. S&P was going to be pretty close. Yeah, I guess not quite because I don't have a line exactly there. If I go to my daily chart, you'll see a line in there. Oh, that's why. I got this trend line in there, but it's not a horizontal line that went forever. So that's why. But, yeah, bottom line, guys, is, you're not the only ones that are looking at these price points, and I'm not the only ones looking at them. I'm just teaching you to look at what the quality traders are looking at, and that's why you're seeing it. What it really means, Michael, is it means you're starting to look at the stuff that the other traders are seeing, which means you're getting on the inside. That's good, right? That's good. All right. Well, ladies and gentlemen, let's call it a night, shall we? Let's call it a night. I'll look forward to seeing you guys Wednesday evening. And Wednesday night, we're going to bring some more light into the candlesticks as we round everything out and call it all an evening here. So then we'll get into indicators next week. So you guys have a great evening. Have a great Tuesday. Awesome Wednesday. I'll see you here at 8 o'clock Wednesday night. Until next time, happy trading and good night.